Traders, what's going on? Jamie Setley here. It is Thursday, August 16th, and 2018. And let's see, can you guys hear me first? Always good to check that. I see Ty, Ziad, Peter, Mark, Chris. What's going on, everybody? So again, just give me a quick confirmation that you can indeed hear my voice and that you can see the chart. Actually start with this one. Yes, loud and clear, sound is perfect. Okay, super. Thank you, Mark. Thank you, Ziad. Thank you, Ty. Okay, so your resident guy that's been not thinking that the dollar is going to extend this rally is here. And this chart, so all right, let's actually step back just for a sec. I'm going to go to a weekly. This is a weekly chart. All right, so weekly chart, we're looking at US dollar. I do prefer to look at this one most of the time, as you know. Otherwise, it's like you're looking at the euro. I know I say that like every week, but that's just the truth. So we've got two things. One, we've got a big horizontal level or zone up here. So this is the Jan 2016 high, okay, right here. And then this is the Jan 2017 low, which you can see we kind of toyed around with, right, last year before we finally broke down in May. We've kind of reached we've reached the bottom of that zone. Now on arithmetic scale, which is what this is, the upper parallel from this fork, actually, why do I have it drawn like that, is like literally a tad higher. Whatever. Point being, we're in the vicinity here of a big spot, right? I mean, we can all feel the emotion in the markets over the last, especially over the last, I'd say, week, right? Ever since this big dollar move kind of really got underway. You know, once we really broke out, I guess that was, you know, last night, the 9th. So yeah, that was last Thursday. So yeah, Thursday, Friday, Monday, Tuesday, Wednesday, Thursday. Okay, so we're in the area, right? We all know that. Different currencies, you know, obviously different potential there. For example, like I'm of the mind that we actually did make a pretty big low in euro, right? With Aussie, I don't know. I'm not. I have reasons to suspect that might not be the case, which we'll get to. So point being, you have reached a level. Now here's what to watch for, or what I will be watching for near term. All right, so let's go back. Remember this red line? This was the line that connected the June and July lows. And then over here, I was looking for the break and it didn't. That's, you know, a mistake. It was a mistake on my part. Well, if we draw, you know, simply extend this into a channel, so the trend line, you got the channel, it's pretty darn good, okay? And you've got, you know, where we topped here yesterday is actually the top of that channel. So, you know, as is often the case with channels like this, you want to look and see what the internal lines are doing. And in this case, you can see that the median line, definitely important. It was clear resistance back here early this month, right, in early August. It was also really, once we broke through it a week ago, that's really when we accelerated to the upside, right? So this point's going to be important, okay? There's just no two ways about it. So I would have this channel drawn on a chart and kind of keep it, you know, up. Because down here, I do believe down here is probably going to be your bounce spot. So, you know, we go to an hourly chart. Look at now the 25 and 75 lines, which I'll make a little more, a little darker, so you can see them, right? So you can see them now, okay? you can make the case that you've got a 5 down here, okay, and that we're due for something of a bounce. We are sitting on the 25 line here, but I'm going to let this play out. You get a bounce. You notice how I have the euro order where it is now, so it's 13.52, and that's because of the short-term stuff. But what I want to see with this US dollar, right? So I might think there's a top up here, but obviously I don't know, right? Nobody knows. Nobody can predict the future. So I don't know, but I think there is. So let's say we do something like this, we kind of bounce around a little bit, and then we come off. You're probably going to see some support here. And at some point in the future, don't know when, my guess is that this line, the 75 line or around there, is going to be resistance, okay? It's been, we've seen a lot of trading around it of late. So like literally since the big move up started a week ago, we kind of rode that line and we're at it again. So there's clearly something here. It's a point of interest in the marketplace. And so therefore it's a point of interest for us, okay? So this is something that I will be watching closely, and we'll get rid of that. But those are the levels I do think that you should really be aware of for US dollar. So kind of broad dollar, support resistance here. And yeah, that's what I'm working with here. All right, so that should be helpful going forward. At least I think so. And let's go to euro quickly. No, I'll go right here. All right, so if we go to euro, so I shared this chart last night on Twitter with you guys, just the kind of real simple look, right? I mean, if you look at this on if you were looking at an hourly chart, a daily chart, a monthly chart, it doesn't really matter, right? Point being is that this would be your neckline that you broke out of last July. We just came back and tested it. Now, what's this line, you ask, that's sloping up here? That is the entire channel back to 1995 high. So connect the 95 highs, or 95 and 2008 high, and you get, a parallel off the 2000 low, which if we scroll through that, we're on a weekly chart now, scroll through that, and you can see all the, the plunges below back in 15, late 15, 16, but there were points in the interim where you did trade around it. So I just think it's interesting that we ended up stopping there too. To me, it kind of gives a little more credence to the idea that we have hit an important spot. And of course, we all know we've got the election spike high up here at 112.99. The low here yesterday was 113.01. Okay. So when we go to the short-term chart, we're on an hourly now, and talked about the other day in the post, we were over here, said maybe one more stab to 113, basically got that. And as it is now, it's actually quite amazing. So I put out the orders to go long at 13.35 yesterday, and the low we missed by less than a pip. I mean, is that even like real, like for real, like that actually happened? But hey, what can you do? So I know some of you guys are in this because some of you told me you are. So if you are, then great. I can do my best as far as giving levels and ideas and feel and provide the so-called official trades. But right, there's no guarantee that they're going to work, or even the ideas that do work, there's no guarantee they're going to get hit, unfortunately. So we got to evolve, right? We've got to evolve. Can actually see 5 up here, just like we were looking at US dollar, right? So ideally, I'd like to see us come back, whether it's late today or whether it's during Friday trading or whatever, like to see us come back into this median line. So This is a pitchfork from the high on July 31st. You can see it works pretty well, right? So pretty good support on the lows. And again, the thing that's important to me when I'm looking at a median line or any sort of channel or pitchfork structure, what's important to me is how the market's reacting to the parallels on the internal. That doesn't mean just the median line, right? It means also the 25 line and the 75 line. So the median line, which we could call the 50 line, clean cut resistance. I mean, right here, okay? No two ways about it. It was even support, actually. I guess that was this morning. That was about 3 a.m. here. So it's even support here at 1357 this morning. Hoping for it to come back one more time, especially because you got this 5 up here, what looks like a little 5 up, okay? I don't know if we do that before we get to 1430s or not, okay? But either way, I want an order on this line. So, as we go into tomorrow, that order could be changed to a little lower, right? Because that's going to be, the median line is sloping downwards. So it's going to be a little lower as we move forward in time. So that is the strategy in terms of trading euro from the long side. And this is a, trading with median lines or trading with forks or channels or what this method. I like to kind of say it's about trading around the edges. If you know what I mean by that, you're getting your reward to risk a lot through precise entry, right? It's like you can have an idea, like I think the euro's bottomed, I'm just going to buy the euro and go away, right? Look, that's for some people. It's just, for me, it's not necessarily for me. It's okay if it's for you. And I'm looking to place orders on the inflection points, right? I'm willing to eat a lot of stops because of that. That's just the nature of the method, okay? And you can see that in the trading stats as well, of course. Like, the winners are much bigger than the losers, but there's also, at least this year, a lot more losers, unfortunately, but still positive on the year. Okay, Ty's got a question. You think a short-term low is in place? Answer is yes, I do. And Ty says we're looking lower after rallying. No, I think a low is in place. Okay, that's how I'm going forward with this. I think reward to risk is highly skewed to the upside here. I think that, we want to trade a bigger, at least a position size of 2 as we come into this level, the 1340s, 1350, what have you, because we'll take some off at resistance at some point. But look, I think that you could have just a shot to the upside quickly. So if I'm giving levels here, we can zoom out a little bit. All these parallels you're looking at, the downward sloping ones, right? These are all the ones that are based on the trend line back from the February, March trend line off the highs. So your really short-term resistance, as I mentioned, is going to be like 1430. Your bigger, kind of more important level is probably actually 115.10, right? I mean, that is the low here. So throw one of these on here. There you go. So 115.10, 115.08 to be precise, and that is going to be the next parallel, which you can see with support here crosses these levels. So, ideally we have everything kind of laid out here for us, and we can kind of try to play these parallels as they are hit. So I'm not going to go too far into my crazy imagination here, but you can envision something like, I mean, look how long we traded between these, right? And again, I thought a low was in here, 5 up, didn't work. It was just a mistake. But if we end up coming up here, something like this, all these parallels should end up providing support and resistance, as they have been for some time. Okay. So there shouldn't be any mystery as to the levels that we're looking at. Okay. That should help us significantly. All right. So hopefully that is clear on euro. Let's move to British pounds, actually. So look, I like euro better than pound here. You know, if you look at a euro pound chart, to me, this just looks like a big base, like you're about to break to the upside on it. So it's a base and an uptrend. You know, so I like much prefer euro than pound here, but it doesn't mean that we can't look at the British pound. So British pound. Remember the stats we ran for the 9 days down in a row. Well, we can do the same thing for 10 days down in a row, and I did that last night, so let's run it here. So we will do 10 days down, and we will do holding periods 1 through 10. And you can see that it doesn't happen very often. So in fact, it's only happened 5 times in the history of the British pound, okay? Almost all the results except for one holding period are positive. So the further you move out, now this is not a sample size to write home about. We're talking about, you know, 3 trades of a holding period of 10 days, right? But the average winning trade is 486 pips, okay, over 10 days. You know, max winning trades 937 pips. Now you do have a max losing trade. That was one of them. One trade, that's 466 pips over 10 days. So, you know, this doesn't mean, again, that you buy pounds and then go on vacation and don't come back. But you can look and let's see where, so you see the magenta dot here, that's the 11 days, or sorry, 10 days down. Go back, go back, go back, go back, go back. The last time we had anything like this was during the financial crisis. So that was 10-11, we had 12 days. This was the big loser, okay? But even then, you did have an initial bounce first. Okay, this is the second instance. That's probably the big 900-point gain right here. And other than that, I mean, you got to go. I mean, shoot, we got to go back to the 90s or 80s or something to find 10 days down. Here's 10 days down, 1989. And it looks like that's, I mean, is that it? This doesn't happen very often, okay? So that's it. So anyway, crazy times. So with cable, you know, I talked about maybe 75.89 as a level, or sorry, 25.89 as a level. Ty says, is this posted? Ty, are you talking about the stats? I'm not sure. Let me know. If you're talking about the stats, we did in the update from 2 days ago, I did the stats for the 9 days down on British pound, which you can see following here, or right here, right? You've got the holding period of 1 through 10 and, you know, all the stats from it. So if that's what you're wondering. So on British pound, again, I think the euro setup is far better at this point. But if we were to get, you know, I'd say up through, first of all, 27.73, which remember was the low from last August. So if we were to get up through there and try to make some, you know, some sort of a little head and shoulders bottom or something, I could envision trying to buy that. But as it is now, I just see reward to risk skewed on the upside, but no, like, you know, no clean entry right here, right now. Okay. Again, I prefer euro at this time. All right. Dollar yen. Trading around very short-term levels. pretty good. You've got, this is the chart from last night, 60-minute chart. We'll go 4-hour chart. Right, you can see this is a shift fork. So again, a shift fork, it moves the median line halfway between. So on the x-axis, it moves the median line halfway between. See if I can figure this out for you. So a channel like this, right? You see the median line is just moved in terms of price. With a shift fork, it's moved in terms, and I know they can say modified shift on TradeStation, but it's wrong. Okay, with the shift fork, it's moved halfway between on the x-axis as well. So it's a little shallower, and it actually, provides a kind of a shallower channel to work with. In this case, it's obviously the one working because it was resistance up here. Now, I just don't have a super strong opinion right now. I mean, dollar yen's really not doing a whole lot, given that, we've got kind of this global equity volatility. Not US equity volatility, right? Not much going on there, but global equity volatility. And dollar yen is pretty stagnant at the moment. So, I'm just kind of sitting here like waiting for some clarity. I'm still open to, if we get a quick spike up into this 1180s, which again would be the month open, that would be a short to me. Otherwise, we're going to wait for clarity when it comes to some other markets before I try a short here. Ultimately, I do think the big test for this is the lower parallel, which is the blue line. We've been looking for that for a while, just haven't been able to get there. And I still think it's probably going to be in the 109.70 area. So again, no reason to force a trade here. I like it lower until 109.70, but there still is that chance, I guess, that you do get a quick run back up into the median line, right? I don't think it's going to happen, but just don't have a reason to be short a market that's not really doing much at the moment. So, see how the rest of the day plays out. Maybe you come back and test this and roll over. Maybe if we start to do that, maybe we get a better entry on a short. Either way, I like the short side, just the very near term dynamics and entry levels are not especially clear to me at the moment. Excuse me. Ty saying, no, I'm looking at your tech levels. I don't see any pending orders. So I sent out, if you're talking about the euro order, the original euro order was the euro long, right? Yesterday, 1335, which again missed by 1 pip, but that was sent out on Twitter. I send out all the trades on Twitter if they're not here, okay? And that was sent out via Twitter. So that's all. No, I do not have any orders for British pounds, if that's what you're asking. Again, that doesn't mean that you can't trade it. Just myself, like I don't have any orders for the pound. Let's actually switch to euro yen. So here's another thing. This is a euro yen daily chart. Okay. You see this downtrend line channel. Look where we found support yesterday on the median line here. My guess is that you're heading up to like 127.80, 128, which would be this blue line. I don't know why it's in blue. Probably because we were looking to buy it over here at one point. I'll make it red. So euro yen looks to me like it's got, a decent place for a little bit of a low. From a candlestick or, a bar perspective, I always kind of like, this new exhaustion low, long wick, and then the next day's an up day. You're building yourself a little base to work higher. And if we zoom in, we can actually draw ourselves a little bit of a fork here, okay? So it's, too early to play this from my vantage point, but if you were to start to trade between these, then you'd have an opportunity to maybe trade on the long side. And again, resistance should be up in this region right here, okay? And that's just your trend line all the way back to February, okay? And you can see it's a very nice dividing line. We did get the support very close to it early this month and then just collapsed through it. So it should provide resistance now for a trade. And again, it's depending on when you get there, it's going to be up near 127.80 or so, right? So I would keep that in mind as well, okay? 127.80 is a spot for Euro Yen. All right, let's go to Aussie. All right, so the Australian dollar, this one's a little tricky for me in terms of like, did we bottom or not? Because frankly, I've got the bigger spot down here now, right? Remember we talked about the December 2016 low yesterday, or in the post last night, as well as the low from, I guess it was May of 2016. So either way, just concentrate on this kind of like 73.10 area. Okay, that's just the parallels here that were support before the break. And even if we have bottomed, my guess is that you do get a pullback from here. So, again, you don't have to be right in terms of saying whether or not this is the low to make money. You just have to, try to trade into the 73.10 area for a pullback, right? Maybe back to 72.50 or something. So that's all I'm looking at in terms of Aussie, is simply the 73.10 area as resistance. Okay, it's kind of all I would want to concentrate on at this point. Don't think too much about it. What about Aussie dollar? So this is the chart also from last night. Again, if I go back to the 2011-13 trend line, right, you can see all the good stuff that happened here. So there's the channel, okay, channel, resistance, support, up, screw you, Jamie, we're gonna break down. And the next one was this one, right? So we're taking the parallel and extending it. That was resistance throughout 2016. Got a little hairy for a while, but it looks like it's gonna come back in play at some point here, again, on the May 2016, December 2016 lows. So if that's where we're headed, then I would think that you probably get 73, 73.10, old lows, get resistance there. So again, those are the levels that I want to be trading heading into, tonight, really, because we're kind of getting there. So again, it doesn't have to be like a full-on, I'm going to be bearish the dollar across the board type of thing, right? You could look to trade euro from the long side, Aussie from the short side, right? As long as the levels are suggesting that. In fact, if we take a look at euro Aussie, what does this look like? Frankly, doesn't tell me a ton, but if you're looking at, this is a daily chart, and you can see that we've got, kind of a nice move up, 3 waves down, nice move up, little choppy correction down, and we're on the 200-day. So not that hard to envision, euro Aussie resolving to the upside. Ty saying, are you suggesting we buy a pullback to 71.45? Well, I wouldn't call that a pullback. I would call that like another collapse. But yeah, I'd be looking for a low down here, absolutely. I'd also, again, but before that, I'd be looking for a high up here, right, in the 73.10 area, maybe 73.10 to 73.30, because those are old lows too. all right? All right, Kiwi is awfully similar in terms of, you know, kind of how I would approach strategy, right? I do think we're coming into some resistance. So here's the channel we've been following, February, March. You can see that we have bottomed on this a number of times throughout the year, and we're doing it again. You know, so you can see like how these, how beautifully these lines play, right? So like we're coming up on, this is the 75 line, okay? Just remember 25, 50, 75. Okay, we're coming up on the 75 line, that magenta line there, that's gonna be like 66.20-ish, okay? Right up here. And I would expect a pullback from there. Okay, why? Well, when we've bottomed on this before, we've seen pullbacks off of it, right? Pullback, pullback. We've also seen a lot of support there. So I talk about it all the time, but you know, just as you have a chart guy talking about former support providing resistance on a horizontal basis, it's true too when it comes to you know, trend lines and slope. So be looking for a pullback from that region, 66.20. Again, I do think that the next pullback is a buy. You can count a little 5 up here, 1, 2, 3, 4, 5. So let's think ahead and get cute here and try to guess where support would be. Well, if we get a pullback, it'd be like 65.75 would be a 618. So either way, you know, up here, pullback. And again, I kind of like buying Kiwi a little bit better than buying Aussie. So, you know, that's last night's post, right? Talked about Aussie Kiwi coming off the way it has. And, you know, massive trend line that we ran into. So I kind of like Kiwi on the upside a little bit more in the near term than say Aussie, but probably not going to deviate a ton. And on that note, I actually want to switch. Actually, you know, we'll take a look at dollar CAD real quick, because I wanted to talk about, when I talk about Aussie and whatnot, you know, you probably need to take a look at copper, what's going on there. It's been in the news a ton lately, as we know. It's gotten brutalized, and it is officially, as they say, in a bear market because it's fallen 20%. Okay, that's fine and dandy. We're getting a pretty good bounce today in copper, actually, but we'll go and see what the deal is there. All right, let's take a look at dollar CAD. All right, don't have a ton to say in terms of dollar CAD at this point, I'm sorry. This chart actually looks kind of bullish to me. You know, came off yesterday, daily reversal support, big up day. I just don't like the idea of buying dollars to, you know, at kind of breakout prices, because I feel like they'd be prone to failure at this point. So I don't have a setup on dollar CAD at this moment. However, I would say that if we continue higher, I would just watch the underside of this trend line back to the April low, right? For some support, or sorry, some resistance. And depending on when you get there, it might be actually be up near these highs. But I don't want to focus too much on this right now, because I don't have a lot to note in terms of dollar CAD. I think the better trade to follow is Euro CAD, right? We had a post on that, or some charts on that last night. So here is Euro CAD at 200 week after taking out the Jan low, and we have followed through on the upside, and we're in the process of putting in a pretty bullish looking candle for the week, wouldn't you say? So we've got that. This is that shorter term fork, excuse me, that we were looking at yesterday. Again, do we get back down here? That might, I don't know, that seems, that'd be a pretty deep pullback at this point. If you came right from here, it would be the 618 at 48.70. So, you know, you've been in a downtrend, you've had a big bounce, tough reward to risk proposition to buy it here. So just kind of like, let's sit with this for a second, see what happens. Again, I like buying euro against dollars at 13.50 or whatever. But if we get some consolidation around here on the median line, maybe a little flag of some sort, then you'd have an opportunity to maybe jump into this too. All right, we're going to move on to some commodity stuff: gold, silver, crude, and copper. So here we go. Gold, you see 1172 is the 618 of the rally from 2015 December to 2016 July. Okay, victory there. So we're on a level. This to me is the really important thing to follow. So this is that line. It's drawn actually off of the 2013 October low and the 2015 November low. And when we go back to it, you can see all the important, you know, levels that you cross here, right? So we are currently below it, right? It would be really bullish to get back above it. That's kind of where I'm getting with this, right? It would be very bullish to get back above the 1190 region. Let's draw a parallel off of these spike kind of lows right here. Okay, that was in 2006. Let's see where those come in. I mean, it's right on the low. So, you know, look, if you gun to my head, I would tell you, I would say that I think gold has made a low. I think gold has bottomed. Tactically, trading wise, you know, I'd like to see us above 1190 at this point, right? The old level was like 1237. So we now can lower that significantly to 1190. And you get back above there, and I think gold's, you know, going to be putting in a pretty good base to work higher from. Silver. So silver also plummeted below its longer term line that we were looking at. Remember this one? So you obviously want to see it retake it, and that's okay. We've talked about this dynamic a little bit. When you take out a level like this, right, and you come back below it, a lot of times you'll retest it again. You know, it happened over here. I'll go daily chart. You can see how it even happened. You know, back here in 2008, right? We were below it, got back above it, and once we were above it, you kind of were supported around it. So, you know, I wouldn't, I'm not too freaked out about silver taking out this level. Also, if we draw a channel from the April high, we have a perfect channel, okay? A perfect channel. So you've got that to work with as well. That would probably be your first big resistance. See those lines right here. So there is gold and silver. Let's go to oil, WTI. So we're getting a bounce off the 200-day here. Took out the low overnight. Now, I want to go a little bigger picture on this. So here's the weekly chart. Remember this from some time ago. Had beautiful resistance at 75, which was right there, right? Low from October 2010. And we've come off a good deal. And to me, this uptrend, you know, at least from this point, you know, from June of last year, is complete, right? So ultimately, I'm looking down towards this 58 area. That's again a very long-term parallel, and it was the big resistance back last year, actually in 2017, early in 2017. And then you can see if I go to a daily, you can see a little better, right? Once we broke above it, we were supported on it, and that was in December, and then we went bonkers on the upside. Okay, so yes, we're getting a bounce off the 200-day right now. But I would be looking for eventual failure from that. And I gather that you probably have resistance right up here about 66.50 actually. Okay, so 66.50 would be where I'd want to see resistance. That's a horizontal spot here. Okay, you got the highs here from January, high here from March, kind of some support over there until we broke yesterday. So if you do get a bounce to 66.50, I'd be looking for a short at that point. Obviously, you got to be a little more careful here, even though my, you know, opinion or whatever is that the uptrend from June has broken. We have bounced off the 200-day average. Okay, I don't want to, you know, forget that. So that has happened. It is a fact. But again, it's also a fact that we broke this trend line. And it's also a fact that we came off of a massive, massive level in 75 in July and made a monthly key reversal. So let's not forget where we came from here either. All right, copper. So when I look at copper, this is a daily chart of copper. The area that just sticks out to me on a chart as being like really, really big support is this level here. So, you know, kind of take the lows back to Jan 2015, right? That all that congestion, support resistance there in 2015, you know, kind of support 2016 and also support in May of last year. That to me is where your support is. It's probably a 618 too. And it is exactly 618. Isn't that a beauty? So that's the exact 618 at 246.60. And to me, I think that's where it goes, right? So this is what I was saying when it comes to Aussie too. You know, look, if we look at this chart, let's look at it from, you know, look at it from this point here, okay? It just doesn't look complete to me. Like it looks like it's got one more little, you know, one more stab on the downside. You know, that doesn't mean it's going to happen tomorrow. I mean, if it is a fourth wave of some sort, if this is a 1, 2, 3, and you get some, you know, you could have a bigger 4 where you get up here, all right, and you could have it really choppy and sideways and make a triangle or something, or a flat, as often does happen with, you know, with fourth waves. My point being is that I just don't think that there's a low in copper yet. Okay, I do think it's a little bit lower. So I think that's kind of an important observation just based on what's going on in the world right now, and the news flow in China and trade wars and blah, 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 blah. I mean, this has been basically copper's been the one that's kind of taken the brunt of it, right? I mean, this was in June. We were up here, okay? And this is what's happened with China, right? Same thing. You know, so this was June right here. This is when copper topped. You know, it looks very similar to FXI, which is Chinese equities, right? Go to Shanghai Composite. support might be a little bit lower here, okay? So you get the idea. All right. So that is everything I wanted to cover today. Do you guys have any questions on other markets? Got some questions here from Ty, and then Peter's got wants to look at pound CAD, most certainly. Give me just a sec here. Let's see. Ty says, is the automated signals available? How's it working? How do you send up when you post a watch list? What are we looking for if these aren't pending orders? How do we best use that information? Okay, so look, so when I put an order in, it's obviously because I've determined that there's enough evidence to just leave an order there, right? That's pretty cut and dry. As far as watch list is concerned, I mean, it's just that. I can't trade for you, right? You have to do that, but I can provide things like this, which would be just a very quick look without reading any analysis or anything of what I'm looking at, right? Where my head's at. Dollar yen short watch list, 110.90's resistance. Okay, well, if here's dollar yen, I mean, here's dollar yen, 110.90's hit like 5 times last night, right? It might be that I don't have this might be watch list instead of, say, a pending order, because maybe the stop's too far away, or it's just not as clean, right? Or what have you. That could be the reason, right? There could be a number of reasons. It could just be that the pattern isn't as clear as I'd like, but the levels are, right? Aussie dollar range, okay? So with this, knowing that we're in a fairly volatile market, not necessarily in Aussie at the time, but it could get that way given what's going on with copper and other markets. I just have these levels mapped out because these are basically where I would want to be trading, right? I want to make a decision at what I think is going to be the inflection point, right? Now, you want to see the market move into the inflection point and then do something most of the time, okay? So these are the levels I'm looking at, right? When these levels are reached, and if the setup is right, judging by at the time what I'm doing, looking at, then I will send out an order via Twitter, as I always do, right? So yeah, I mean, that's the best way to put it. So your question is, how do we best use that information? That answer is going to be different for everybody, okay? There could be people in here that are very, very, very short-term traders that might want to trade into 110.90 and make 10 pips. There might be people in here that are trying to build a longer-term position or whatever, or might have a position and take some off at a certain level. So I can't tell you how to use the information. I can give you kind of examples of how other people might use it, right? How I use it, right, is as I explained, I'm looking for, these are things that just don't have all the requirements for one reason or another for a trade. But, if it happens, then it becomes a trade. So I hope that helps in terms of answering that question. In terms on the yes, Ty, absolutely, my man. He says he's working hard on maximizing it. Absolutely, and good for you. That's you got the right attitude, my friend. In terms of the automated stuff, that was we kind of did a beta thing. We kind of didn't have the support for technology at the time to do it, but the alerts are still being sent out on occasion. So like, there haven't been any actually in a while. So like, this is the downtrend euro 10-minute alerts, right? You can see we haven't had one in a while. So I'm looking for one here pretty soon. We'll probably get one a buy if we go a little bit lower. But that's something that if we really want to do it right, we've kind of got to put a lot more resources into it. But I would say send an email to info@SB Trade Desk asking about the alert for the sign up information. Okay, and don't forget, I've also got there's a PDF on the posts and a presentation that has that information as well. You can look through. Okay, so like every post I put up has that information. So like you go here, right? Automated alerts webinar PDF. So like go to PDF, you can click on it right here, right? This is more stat stuff, but let's see here. Hold on. Where's the alert FX? Alert FX. Well, the presentation will have more, but yeah, okay, you did watch the video. All right, we'll send an email to info asking about the getting signed up for alert FX. Okay. All right. Moving on. Where was I? Oh, pound CAD. That's what we had. Peter, I think. Was it Peter? Yeah, Peter wanted to look at pound CAD. So, Jamie, can you take a look at pound CAD? I am short from the break of the Head and Shoulders 7160. Thank you. Sure thing. Let's take a look. All right. I can already tell that we can have a very nice looking channel here. So we're going to draw a channel in this. All right. So here is this channel. This is just your regular run-of-the-mill channel. And I will say, Peter, so yesterday we had reversals in a number of CAD crosses. Pound CAD was one of them, of course. And when I look at this chart, you can see just the horizontal level. Look at all the levels that, this area has been a pretty good, kind of pivot, right? So support and resistance at times, most recently back in November. So I would lighten up down here, frankly. And if I go to the 4-hour chart, resistance up here. So take it step by step. If we were to get, some resistance right here, 67.70, which has been resistance recently, you can see right here on the 9th and then the 13th and 14th. So if you got resistance there and rolled over, I would just trail the stop. Okay, because the next level for resistance is probably going to be the median line up here. This is the center line of that channel, and you can see that is very clean in terms of the action around it and how it held up, and then you had a big breakdown through it. My guess here is that this looks actually pretty good. Like this is a 1, right? 2, you have a big 3, kind of get a 4 up here, let it play out. In fact, that's beautiful. So the 38.2 is going to be right in line with those highs from August 8th. Okay, that's going to be, let's just call it 69.20, 69.30. All right, Peter? You get up into there, and that'd be kind of a time to re-short it, right? To return to the short side, in my opinion. So again, one of the things I stress is everyone does things a bit differently, okay? But if this were me, I'd be trailing the stop, after we pull off this area, or at least to here at this point now, okay, with the expectation that it's probably going to get hit, because again, we've come off of a really good support zone. So expectation that it's going to get hit, but then I want to be, returning to the short side up around 69.20, 69.30. You want to see what the Elliott channel looks like. It's even like, so this is great. This is a really good chart. This is a good channel. So resistance is going to be up here. I love it. All right. Peter, hope that helps, my man. Okay. Let's see here. Great. Okay, great. Peter, thank you. All right. So I'm going to wrap it up here. And yep, 1 day left here in the week. I think the biggest thing to take away for me so a couple of things here. One, I think a euro lows in at 113. Okay, I want to buy it back on that 113.50 or whatever, right? The median line down here. Two, the US dollar chart. I keep that front and center. So the 4-hour chart over here with this channel, because all these levels within the within the pitchfork or the channel should end up providing tradable levels. Okay, and three, looking at a possible actual dollar long play here would be the Australian dollar, right? Really clean, and don't forget about the fact that copper probably isn't done and probably needs one more, slam on the downside before it's ready to attempt a bigger recovery, right? And that is my key takeaways from today. All right, so thank you all for your time as always. Hope you enjoyed the webinar. Hope you got something out of it. And I will talk to you next week, and have a great rest of your week, what's left of it, and a great weekend. All right, bye.